Welcome to the deep dive. Today we're going to unpack confluence in trading.
Hmm.
Think of it like, getting a few green lights before you make a move. We've lined up three examples actually from the Nifty 50.
Okay.
Reliance, HDFC Bank, and Infosys. Just to show how seeing multiple market signals align can, well, maybe point to stronger trading opportunities
Yeah,
without getting too complex, hopefully.
exactly. It's really about looking for agreement, do different indicators, different clues, tell you a similar story. That's where the confidence comes from.
Okay, so let's dive right in with Reliance Industries.
Hmm.
Uh, Imagine you're looking at the daily chart
Yep.
and the price dips down to around, say, 4,350. Now, this isn't just any random price point. It's a level where historically buyers have jumped in, multiple times over the last year or so, a support level.
That's the first clue, right? That history. If it's bounced there before, buyers are likely watching it. It suggests some underlying demand down there.
Right. And then, let's say, right at that nothing 350 mark, boom, a bullish hammer candle forms, the one that looks like a T.
Hmm.
It basically signals that sellers tried pushing it down, but buyers fought back hard and closed it higher.
Yeah, and a hammer right at support is interesting. It often shows that shift. Sellers make a push, but buyers just overwhelm them. Suggests upward pressure might be building.
And here's the third piece. Along with that hammer candle, you notice a big jump in trading volume.
Ah, volume confirmation.
Exactly. That higher activity kind of confirms there's real buying interest, serious money moving at that
Mhm.
specific support level. So
Yeah.
putting it together for Reliance, which, by the way, is a huge chunk of the Nifty, like 9.95% weight.
It is, yeah, very influential. So the confluence here is one, the historical support, two, the bullish hammer showing buyers defending, and three, that confirming high volume. It just builds a much stronger case for a potential buy setup than any single one of those alone.
Makes sense. Okay, let's shift gears. Example two, HDFC Bank, another big one, 7.62% of the Nifty. So imagine this time the price climbs up, hits 1,950 on the daily chart. And this Euro 1,950 level, it's acted like a ceiling before. Resistance. Maybe sellers pushed the price back down twice from here in the last 6 months?
Okay, so the opposite scenario, a level with a history of sellers stepping in. Supply has tended to, well, overpower demand around there.
Precisely. And then right at that resistance, you see a bearish engulfing candle.
Ooh, okay.
That's where a big red candle completely swallows the previous green one. It signals a pretty strong shift towards the sellers taking control.
Yeah, that engulfing pattern really shouts, change in command. Buyers were there, but then sellers just came in much stronger, pushed it down decisively. It's quite visual.
And let's add one more thing. The RSI, the Relative Strength Index.
Uh-huh. Be oscillate.
Let's say it hits 75. Now, anything above 70 is often seen as, overbought,
Hmm.
kind of stretched, might be due for a pullback.
Right, so it's hinting the rally might be a bit exhausted.
So with HDFC Bank, what's the confluence telling us? Resistance level, bearish engulfing candle, and an overbought RSI.
Huh. Well, those three aligning, hitting that known resistance, seeing a strong bearish candle pattern, and getting an overbought reading from the RSI, it really strengthens the argument for a potential sell opportunity, doesn't it?
It seems much clearer than just one signal. Okay, last one. Infosys, about 3.24% Nifty weight.
Okay, INFY.
Daily chart again. Price dips, touches an upward sloping trend line around, let's say, 1,500 Man West. And this trend line isn't new. It's been holding for months. Prices bounced off it before.
So dynamic support, a trend line that's been, respected multiple times suggests that upward path is still generally intact. Buyers keep seeing value along that line.
Exactly. And right on that trend line, maybe you see a bullish pin bar form.
Similar to the hammer, right? Long lure tail.
Yeah, showing buyers rejected those lower prices again, pushing it back up near the open.
So the pin bar right at the trend line just reinforces that idea. Buyers are actively defending that established upward move.
Okay, and one more indicator maybe. Let's say the NTD line crosses above its signal line right around the same time.
The Mansi crossover, often seen as a sign of increasing bullish momentum.
Right, and maybe that's particularly relevant for IT stocks like Infosys, especially if, say, the IT sector's been doing well, like it did relative to the Nifty 50 in 2024.
That context matters, yeah.
Yeah.
So what's the confluence here for Infosys?
Well, you've got price hitting that key trend line support.
Check.
You get a bullish pin bar showing buyer rejection right there.
Check.
And you get a bullish Mansi crossover suggesting momentum is picking up.
So the alignment of trendline support, the pin bar confirmation, and the MASD signal. It all points towards a potential buy setup. Three different types of analysis lining up.
So you can kind of see, right? By looking for these moments where multiple, ideally simple signals align in these major Nifty 50 stocks like Reliance, HDFC, Infosys, you can, well, build a stronger reason for a trade.
Absolutely. And given how much weight these stocks carry, sometimes these confluences can even give you a feel for the broader market sentiment.
That's a good point.
And for anyone just starting to explore this, really keep it simple. Don't try to use 10 indicators. Stick to maybe 2 or 3 signals you understand.
Right. Yep.
Practice spotting them on a demo account first. Get comfortable without risking real money. And always, always manage your risk. Use stop losses.
Crucial advice. And maybe stay aware of news too, right? Like Reliance's quarterly results could definitely impact things.
Oh, absolutely. News
Yeah.
can override technicals sometimes. You need to be aware of the fundamentals too.
Okay, so we're about wrapping up. Here's a thought to leave you with. How could you start using this idea of confluence? Maybe just looking for two simple things aligning when you analyze Nifty 50 stocks, or really any asset you follow. What basic tools might you want to explore a bit more to find those moments where the market seems to send a clearer message?
Good question to ponder. It's about layering evidence, really.